Welcome to The Explainer. Today, we're digging into a really fascinating analysis from stock market technician Joe. He thinks he's spotted a powerful setup in one of the market's most important sectors, and it's a pattern you're going to want to know about.
So what's the big deal here? Well, work is pointing to this recurring technical pattern that's showing up across a bunch of major energy stocks. It suggests that a period of, stored energy might be ready to be released. The charts look kind of quiet right now, but that quiet might just be the most telling signal of all.
All right, so here's how we're going to break this down. First, we'll look at the key signal he's identified in the energy space. Then we're going to get into the anatomy of this breakout pattern he's seeing. After that, we'll see where else it's popping up. And finally, we'll take a quick pulse check on the overall market to see if conditions are ripe for this to play out.
Let's kick things off with a stock everybody knows, ExxonMobil. Now, if you look at its chart on the surface, you might just yawn. I mean, it looks like it's been doing a whole lot of nothing, just moving sideways. But sometimes the most boring charts hide the most exciting opportunities.
See, according to this sideways action isn't a sign of weakness at all. It's what technicians call a constructive consolidation phase. And the key is that it happened right after a really, really strong move up, which is exactly the kind of behavior you want to see. And this quote just nails a classic technical concept. The $100 level, which used to be a ceiling or resistance, is now acting as a floor or support. For traders, that kind of role reversal is a textbook sign of real underlying strength in a stock. So how does this idea of a support level fit into the bigger picture? Well, this is where it identifies a very specific three-part setup that signals a potential breakout. And this is really the core of the whole analysis, the thing you'll want to learn to spot. Think of it like a sprinter. First, there's that powerful sprint. That's your strong prior move. Then, the sprinter catches their breath, right? That's the sideways consolidation. And all the while, their body is getting ready for the next race to begin. The strength is proven, the energy is being stored, and the technicals are basically reloading for another launch. So one of those key indicators is something called the ADX. Now, don't get hung up on the jargon. All it does is measure trend strength. A low ADX reading just means the stock isn't really trending hard up or down. It's just moving sideways. But here's the twist. Rebel sees that not as weakness, but as potential energy, like a spring being coiled tighter and tighter, just waiting to be released. The second piece of the puzzle is the zero-line reversal on an indicator like the MACD. Just think of this as a momentum gauge. After that first big move up, the gauge was redlining. Now it's come all the way back down to its baseline, the zero line. It's essentially a reset button for momentum, letting the stock build a fresh base for another powerful push higher. Okay, so we've got the pattern down. Now let's see how this isn't just some one-off thing happening in one stock. Points to this exact setup repeating itself all across the energy sector, and that is what makes this analysis so compelling. And you can just see it plain as day right here. From Chevron to Suncor, the same ingredients are all coming together. You've got Chevron consolidating, you've got Williams with its momentum indicator resetting at that zero line. Suncor, it's formed this huge base that Rambo calls stored energy. See, it's the same pattern again and again. And the list just keeps going. Rebel also points out similar characteristics in other big names like Marathon Petroleum and Valero. Now, when you see a pattern repeat itself across multiple leaders in the same industry group, that suggests this could be a sector-wide phenomenon, not just a few isolated cases. A great setup in one sector is one thing, but it really needs the wind of the overall market at its back to succeed. So let's zoom out for a second and look at the broader health check that Ripple provides for the market as a whole. So what he finds is a bit of a mixed bag, really. On the one hand, you've got low volatility and positive underlying trends, which is great. But on the other hand, sentiment has become extremely optimistic and the market is technically overbought. And those are classic signs that often come right before a short-term pullback. But here's the thing. Rebel sees this potential for a pullback as a feature, not a bug. He believes any short-term weakness would actually be a buying opportunity. It would act as a healthy shakeout of all that extra optimism and would set a much better stage for the next move up. So, what should you really take away from all this? It's not a list of hot stocks. It's an understanding of a powerful pattern that you can now go out and spot for yourself. Remember the sequence. A big show of strength, followed by a period of rest and consolidation, and then a technical reset. That's the recipe Rabel sees for a potential breakout.
Rabble has laid out the whole technical case for a potential breakout in energy. The charts show the energy is stored, the spring is coiled. So now it's just a matter of watching and waiting to see if some kind of fundamental trigger, whether it's geopolitical news or economic data, can finally light the fuse.